Welcome to Business News SA. Today we take a look at top working capital loans in South Africa. An unexpected change of your business financial situation can be incredibly stressful. This is when working capital loans may be helpful in covering the shortfall. It's typical for businesses, both large and small, to use borrowed capital to meet their day-to-day needs. Working capital finance, also known as a short-term loan, helps businesses to increase working capital in a business. This type of finance is ideal for business owners who find themselves in a financial crunch and need an extra boost to cash flow. Working capital money can be used to finance a company's everyday operations such as stock, payroll or taxes such as VAT. It is, however, not to be used to finance long-term assets such as equipment, or investments such as property. It ranges from short-term loans and bank overdraft to invoice factoring and debtor finance. Funding amounts for this type of financing can range from our 50,000 to our 3 million with a relatively quick vetting and approval process. Application process. It's never been easier for small business owners to apply for finance. Many lenders allow for business owners to apply online to qualify for a business loan in South Africa. The entire process is digital, so they can approve your application directly on the platform if you provide the relevant documents. Collateral. This is an asset that an applicant uses in order to qualify for a secured loan. In the case of a borrower defaulting on the agreement in a secured loan scenario, the lender has the ability to take possession of these assets. As a cash advance is an unsecured product, it does not require collateral. This is a win for new businesses that don't yet have a lot of assets. Interest rate. The interest rate, which is expressed as a percent, is owed on an amount lent over a fixed term. As part of the loan agreement, business owners will be required to pay back the principal amount, along with the agreed interest. There are a number of factors that can affect the interest rate you get on your business loan, including your credit score and whether it's secured or unsecured. While the interest rate is set by the South African Reserve Bank's Monetary Policy Committee, it is possible for business owners to negotiate the interest rate they get. Repayment term. The term refers to the amount of time it takes to pay back the total amount borrowed from a funding provider. This term may be set and known as a fixed-term loan. Alternatively, it may be flexible, which allows funds to be paid back in line with the business turnover and therefore uses an estimated repayment period. Secured/unsecured. Working capital finance can either be secured or unsecured. With secured loans, the borrower is required to put up assets as security or collateral. This is to ensure that the business does not skip any repayments. An example of security is paid-up property. A disadvantage of this type of business loan is that it often has a longer approval time because documents have to be checked prior to approval. The unsecured loan option does not require the borrower to put up any collateral as security, however the borrower is required to sign personal surety for the loan amount. Some cons of an unsecured loan is a higher interest rate, which makes it more than a secured option. Typically only companies or business owners with a high credit rating are eligible for an unsecured loan. A major benefit of this type of loan is a quick payout. Qualifying criteria. It's important for business owners to be clear on what is required of them before they apply for funding. With regards to working capital funding, some of the requirements a business needs to meet are: registered and operational for 12 months. Have a good credit standing. Meet a turnover threshold. 6 months bank statements. For a secured loan, some of the documents a lender may request any of the following: annual financials, management accounts, bank statements, debtors listing and title deeds. Return on investment. The money you borrow for your business should benefit your business in the long and short term. Business owners need to ensure the return on investment their additional financing offsets the cost of funding to maximize profitability. It is therefore important for business owners to consider financing solutions that meet their business needs in terms of cost, terms and conditions, and avoid any hidden costs that may arise at a later date, including early repayment penalties, etc. Benefits of working capital. Keeps your business afloat when cash flow is slow. Quick application and approval process. Fund growth or big projects. Cover emergency expenses. Sustain your business during slow times, payroll, equipment upgrades, inventory, marketing expenses. Thanks for watching.